Welcome back to another edition of Brian's Big Idea. And this week, I'm going to talk about me because I'm number one. All right. It's a little uh, an homage to Toby Keith. It's a wonderful song. Let's talk about me. I don't always talk about me. I try to highlight the other services here, but I'm going to talk about low price stocks today. And a lot of people will tell you, well, maybe not a lot of people, but most stocks that are under $10 are that way for a reason. Usually there's something bad happening, but many regular retail investors look at these under 10 stocks and they say, boy, it's $6, it's $4, it's $8. I can buy 1,000 shares of this and it just needs to double, triple, quadruple, go to 30, and boy, I'll be rich. That can happen. But what you have to do is recognize when stocks are bottoming out in these low price stocks. They can still go to zero. And oftentimes stocks that are heading down from 30 down to single digits, you might not want to be in those, but I'm going to take a look at a couple names that maybe you should think about. And then we'll take a look at my great service here at Zacks that I run. It's stocks under 10. All right, let's go to my first name that I'm going to highlight here. And it is Research Solutions. Research Solutions. It's RSSS. It's a Zacks rank number one. That's a strong buy. It's got an A for growth and an F for value. And in all my growth videos, I love showing those because it's a growth divergence. It tells me right away I'm on the right path because I'm the aggressive growth guy. When growth investors and value investors are looking for different things, and it shows up here in our style scores by giving completely divergent scores, ranks, whatever you want to call those, I love to see it. So Research Solutions is a company. It's a micro cap. It's tiny. It's very small. It's $87 million in market cap and trades pretty thinly here. 23,000 shares are average volume. You don't have a chart on this one. I'm going to tell you something. I do know this company. And I went out to Los Angeles, California several years ago and met with the company. And I think that there's good potential here. They have a unique solution in terms of, what they're doing for searches online. So let's go ahead and take a look at the numbers that we love to see, we love to look at. First thing that we got here is a big beat, 200%, another big beat, 200%, a big miss, and then another good size beat, 100%. So we're averaging 100% positive surprises. And we're bordering around making money, losing money, and break even. Let's go ahead and take a look at the estimates. Our estimates moving, not for this quarter, break even. Next quarter, looking for a loss of a penny, not really moving. And here we see a decrease in the loss per share for the full year, fiscal 2024, from 8 cents to 6 cents. And next year looks to be break even. Not really good at the pen, as some of you know. What about the revenue growth? And that's the consistent thing here that I like to see. We got 18% this year. We got 17% the next year. And the next year, that number could tick higher. We could see accelerating revenue growth, but still good double-digit revenue growth. Okay, let's jump to our next one. It's Enviri Corporation's NVRI as the ticker. It's a Zacks rank number one. That's a strong buy. It's an A for value and F for growth. So we're going the exact opposite as what I normally do on my growth videos. But it is a stock under 10. It is getting beat up today. The CPI came in a little bit hotter, and that's why a lot of stocks are down. The stock really ramped here in December and has been holding out in a range. So there's a chance that it moves higher. This is in the waste removal space. People are always going to be making garbage. All right, let's take a look at why I like this stock. And I do like this one. 125% beat, a 60% beat, 114% beat, and accelerating up to 225%. Look at that, looking for losses, and the last 2 quarters they've been profitable. You love to see that. At least I do. Once again, though, the estimates are calling for an 8-cent loss this quarter. There is no estimate yet for the first quarter of 2024. Last year, it looks like they're going to post a small loss of 22 cents, but this year, we go from an 11-cent gain to a 22% gain. Now, I'm not good with math, but that sure seems like a double to me, so that's just what investors love to see. Let's go take a look at our growth story here. not really a big-time grower like Research Solutions. We got 7% this year, trimming down to 3%, but that number could move up when the company gives forward guidance when they next report. All right, finally, I want to talk about Carroll's. Now, this is a stock that was in stocks under 10, but here is your telltale sign of what's going on. When you just look at a chart, you see a big pop and then something just going horizontal here. Carroll's was being purchased, so we were able to capture a nice gain in this one. So I know this is a Zacks rank number one. That means the estimates, the stock isn't going to move much. I think it was $9.45 was the acquisition price. So this company is being bought, and that was a good size winner. As you say, I think we bought that somewhere down around here in 7, so we're getting out 9.5 on an acquisition. That was a good move for stocks under 10. And what do you get when you get the service at Zacks stocks under 10? Well, you get Brian Bowl and me giving you a weekly update on what's going on in the market. In this particular most recent write-up here, I gave a preview for all of the earnings that are coming up over the next month, what they did last time, how their stocks moved, and you'll get a weekly update on the broader stock market, as well as everything that's in the portfolio. And just about once a week, I add a new stock under 10, and from time to time, we'll cut out of a couple more, take some profits. So we're going to average at least one a week for stocks under 10. And I've done the math on this. I think it's more like 70 names that I'll add over the course of the year. So that's a lot of stocks, a lot of different things. Again, when it's under $10, shouldn't be all of your portfolio. Your whole portfolio shouldn't be in stocks under 10, but part of your aggressive portfolio should definitely look at it. So why don't you give it a try? Take a look at Stocks Under 10. It's run by your man, Brian Boland. All right, that's it for this week. Be sure to join us next time when I look at a few more stocks and another one of our great services here at Zacks. And until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.